Is hoping that job cuts and a restructuring program will improve profitability after the firm posted worse than expected quarterly numbers. Dell shares traded off in after hours as 7.5% drop in average selling price hit margins on rising sales. The company also warned that customers may cut back on spending, a problem compounded by Dell's heavy exposure to the US economy compared to rival Hewlett-Packard. Let's talk a bit about where Dell is headed. Alexandra Bosnjak joins us, a lead analyst at Strategy Eye Digital Media. Alexandra, nice to have you with us on the program this morning. Your thoughts on how well Dell is managing to turn around this the business model at the moment?
In Strategy's Eye view, it's really not a big surprise to hear these results. What happens when market has the numbers and expectations and the particular company, in this instance Dell, doesn't meet them, it tends to negatively react based on the figures. But in Strategy's Eye view, the current, if you will, financial jamming we see coming from Dell may not really reflect the overall rather well-performing company, despite the current slowdown, if you will, because things have to be put within the wider context of, one U.S. economy and to the IT enterprise market.
The market continues to be concerned, though, about the exposure to the United States compared to HP and its rivals, and they're also concerned that it hasn't embraced the retail model. It's been very reluctant to move away from this direct-to-public sales model, which has been less successful in recent years. Now, they are addressing that, but are they dealing with it fast enough? Because the analysts prefer HP at this point in the cycle rather than Dell.
I'll give you a different point of view, if you will, for why analysts prefer HP. There's something that has been happening over the past, if you will, 3 years, and it's content. It's multimedia applications where HP is much more successful than Dell, and that's where Dell has been rather slow in catching up with the enterprise market, because that's what's going to drive the enterprise market, and HP has been extremely well positioned to dominate this particular segment. So people will not look at it from a content point of view, but this is where the IT infrastructure and hardware and even software is going in the short and long term. So Dell has to really reposition its money into R&D and catch up on this particular business segment if it, of course, intends to be positioned to compete with HP.
Alexander, where does this leave Michael Dell? He seems to be about halfway through this one-year turnaround that he promised. I don't think he anticipated it was going to be in these difficult circumstances as he's found himself in. Is he going to be able to stay? Is he going to be able to remain at the helm of this company if he doesn't turn it around by August, which is the dateline that he set for himself?
I'd rather stay out of speculation whether he's going to stay or go out. It certainly puts him in a challenging position. As I said, I call it a financial jamming, so he will have a great opportunity to test his skills and all his experience. In terms of consumers, consumers tend to like Dell. So there are lots of good things that are on Dell's side. Dell has been always sort of proactive in terms of combating with Microsoft and giving consumers choice and trying to keep XP in addition to Vista and, the whole thing about Ubuntu and Linux. So there are positive, if you will, consumer demand, and consumer and developers tend to like Dell, if you will. It is a robust company. However, lots of catching up to do both on R&D side and financially.